We have Krishna Sanghavi now joining us. He's a market master today, CIO-Equities at Mahindra Manulife Investment Management. He's with us here on the studios. Krishna, great to have you with us here. Thanks very much. I mean, things are continuing to not aggressively move higher, but I mean, the up move continues and the up move is extended even as we speak. In the past couple of times that you've been here, you've sounded a bit sort of a little defensive, right? Maybe things are getting a little excessive, but there's no telling how far it can stretch, right? In this current leg. What are your fresh thoughts on what we're seeing out there? Yesterday we heard some comments from SEBI on the SME IPO approval process, and that has been such a big area of wealth creation and so much activity, so many listings, etc. You know, sometimes you get these signs from, it's not a direct kind of a sign, but you know, you get this kind of regulatory talk. We've seen this over past cycles as well. Are we at that stage where people are starting to sit up, you know, actually speak about what's happening, you know, expressing worries, and that perhaps hits sentiment somewhere at the margin?
Yeah, sure, Prashant. I think you're right. Broadly, we've been cautious for some time, and in a way, no. If you look at India as an equity market, which is a play on Indian economy, etc., I think there is structurally reason to be bullish on India as a equity asset class. What's the worry can be more on relative valuations across sectors, across market capitalization. So that's been one area where, yes, clearly worry was that, rather worry is also that, you know, a lot of small caps, maybe micro caps, possibly mid caps are, you know, a bit, let's say, on a valuation wise stretch right now for what earning potential they have over next couple of years. And not every stock you can discount, you know, 27 and 29 and 31 earnings, because it's honestly too far, you know, to cite. So what's happening right now? I'm not ignoring. I'm actually, you know, saying SME on is something we don't really track as an institution. Yeah. So I'll possibly ignore that. So if you really sit back and think, yeah, fundamentals are good. What's clearly happening is a surge of liquidity, and you know, the surge pricing is what we are used to in our, you know, thing. And maybe that's a time, you know, you figure out. There are some times of the day where the pricing for the same route journey is much higher than otherwise. So possibly, yeah, today is a time somebody really wants to buy equities. Willingness to pay that higher valuation is in a way indication of surge. Yeah, if somebody can sit back and say, okay, I don't want to participate because I'm already invested well enough and the incremental money is not something I want to put to work today, is great. But somebody who's under-invested might still have that feeling that even if it's a beginning of journey for myself, so why not start today? I think that's one way to look at investor profile. If you look from a pure market side, yeah, clearly earnings are reasonably okay. Not every sector is going to grow at same time, and that's the beauty of, you know, sector rotation or profit pool participation of economy. That will play out. And the last part of, you know, let's market moves on what? Fundamentals, liquidity and sentiments, right? So broadly, I mentioned fundamentals, good, liquidity, surge pricing maybe. Third part is sentiment, and sentiment is clearly something coming outside India. Exactly a month back, you know, we all would have possibly spent enough time discussing what can happen to yen carry trade, etc. Now come back today, maybe, you know, first week of August and first week of September, more or less, you know, a lot of markets are higher than what they were. Possibly yen is very much same as what it was before that appreciation started. Yeah. So those short-term moves honestly are difficult. That's a sentiment. And what you mentioned about markets being expensive, not willing to, you know, give up, I think it's true worldwide. Almost every market you track globally has the same phenomenon, and that's a sentiment. I really don't know what can change.
You know, which is why I want to go back to the surge pricing example that you made, Krishna. The thing is, when you have to go to office every morning, you have to get into that cab. Surge, no surge. The only thing you can do is maybe choose your route a little wisely and decide whether you want to go down A road or B road or toll road or non-toll road, right? So the analogy here being that I think investors have realized that for long-term wealth creation, you've got to be in the market. Yep. That lesson has been well learned, I think, COVID onwards. So now help out someone who needs to come in and start deploying money fresh. See, it's very easy, like the day, election result volatility day, when you get the dips, people come in and buy. And we've seen that with mutual funds, right? The hard part is to decide on the route when you know you have to pay the surge because you have to go to office. So then help us navigate the route in terms of what to buy, portfolio construction.
Actually, I can't obviously deny the fact that we all need to go to office at a particular time. There's nothing much options.
No work from home?
No work from home. At least you have to get on the surge. If you get lucky, you know, suddenly surge drops, you get very lucky and you get a, you know, a great price at a, you know, good bargain. But otherwise, you know, surge is the way to go these days.
You know, so as long as you're willing to pay for that valuation, it's broadly okay is what investors should be able to appreciate. And when you're paying for higher valuation, honestly, the real risk is, will you get an exit from the same stock at a similar multiple, or your earning growth might be offset by the valuation compression, because you surge pricing, then you have to either wait for the next set of surge pricing to get off that particular stock in terms of valuation, or you say, okay, because the growth is so good, even if I lose something on valuation front, I'm still going to make absolute money for myself. And I think that's one way to look at it. Other way to look at it is really, yes, is there an alternate option, which is alternate market cap segment, which is large cap, mid cap, small cap, let's say choice, or you figure out a little bit maybe sector wise.
Yeah, so that's what, if you could help with the sectors.
Yeah, sure. So I think market cap wise, perhaps large cap remains better. I think sector wise, it's a little bit tricky right now, because what's really playing out is, financial, which has had the best, let's say, earning profile of last couple of years, is possibly having its issues coming up more from ownership. Reasonably well-owned stocks, heavy ownership in the index. So to that extent, that's something very tricky in the sense that earnings are in place, maybe ownership is hurting. At the same time, way Indian markets are, Indian economy is opening up, where this entire thing about China+1 is playing out everywhere in the system. You have a nice situation where a lot of new companies are opening up, which possibly were not the situation in India 2 and 5 years back, because this entire China+1 thought process, PLI as a category has really opened up new businesses which we've not seen. I mean, nobody would have seen some of those EMS kind of names, or today anything in India you look at, PLI is so over encompassing that you have a ready demand being already met by some import. All you got to do is make it in India. You don't have to worry about a customer. You just have to figure out how to produce it in India in the quickest possible time, because there is a PLI structure. So that's a little bit tricky. On valuation, I said yes, but I think on a macro piece, yeah, there is something which is, maybe telecom has emerged as a new sector. Possibly, I think you look at it, FMCG, consumer staples, that's something which is likely to do well, because you got a nice rural, recovery expected on the earnings side. And yeah, clearly, if you want, power is another sector which is still looking good. Maybe core economic sectors.
So financials, telecom, FMCG.
Yeah, and core economic sectors, I guess, power is one, oil and gas, metals as a pack, because these are the enablers which will take us to that, make in India journey all over it.
Right. All right. Krishna, when you spoke about that yen carry trade and everyone forgot about it, I recall, speaking to someone who's more trader mindset, and they said, Nigel, good coverage on the yen today, but I'll tell you what, the flows are so strong and the buoyancy so much in the Indian markets that people will only be focusing on making rupiah. And that seems to have played out, because the markets are up 1,000 points in the last,
That's right.
1 month or so from those lows that we saw. I wanted to ask you about two themes. One is railways and defense. Valuations seem to have gone out of whack. The opportunity is large, but how much of the good news has played out? And do you all recommend getting in still at these levels?
Yeah, sure. So I think same thing. If somebody is willing to pay for earnings which are 2 and 3 years down the line, it's okay. Otherwise, if you look at next couple of years, I think a lot of these earnings are priced in. Another thing which drives this sector really is the order book. And that order book accretion in a way continues, but now they've reached a stage where the current order book is anyway sizable. So, one did not worry about order book visibility beyond a number, is my sense.
But at current reckoning, what would you do? I mean, someone who has a longer time frame, maybe 3-4 years, as you mentioned, it's okay. For the time being, will you wait for a better entry opportunity in railways and defense?
Yeah, sure. I think, you're right. Prefer to wait for a better entry point, considering the kind of run-up, etc. we've had,
Okay. What's the sense that you're getting just in terms of valuation? Some of the newer listings, that's where the, Prashant started off by asking about this. That's where there's a lot of chatter. And I'm not talking about the SME board, because, you as institutions wouldn't look at that. But even in terms of some of the high profile IPOs that have come to the market, Ola, for instance, there's a lot of anticipation around Swiggy. There are smaller companies that are coming. I mean, there's a microfinance listing that will probably happen soon. What's your overall thought? I mean, have you been participating just pre, post? How do you look at some of the new paper that's come to the market?
Sure. I think as economy is growing, markets giving a lot of opportunities to buy. So in a way, we do participate in all those all those new IPOs, wherever we find attractiveness on valuation stroke, the business opportunity. So that's not a challenge. The only area where one looks at it, IPOs are coming in two categories. One is new set of companies, which possibly, there is no parallel in India in the past, available names, and other set is, existing companies which they have their own available reference points as a benchmark peers. So it's slightly difficult to really, evaluate absolute new set of companies because there's no reference benchmark, and that's what a lot of market participants are focused on that area, because that's a new opportunity. The kind of growth one may get there is reasonably different, and plus little bit narrative helps there. Yeah.
It's a pleasure, Krishna. Appreciate you joining in, and thank you very much for being with us here on
Sure.
CNBC-TV18 with
Thanks.
all of that perspective. Lovely chat as always, and we'll remember that surge pricing. We'll reassess that next time you're here. Thanks indeed.